Car financing in 2025. Tips to avoid paying too much. Hello everyone, welcome back to the Homework Guide channel where we arm you with the knowledge you need to navigate the car buying process like a pro. Today we're tackling a big topic for anyone looking to buy a car in 2025. It's something that happens after you negotiate the price of the car. I'm talking about financing. With interest rates still high and dealerships looking for every opportunity to squeeze more money out of you, it's more important than ever to understand the ins and outs of car financing and what happens in dealer finance. Hi, I'm Kevin Hunter, known in the automotive world for the last 15 years as the Homework Guy, and I'm proud to say we are the most trusted car buying advice channel on YouTube. We've earned that reputation by never stooping into fake news and clickbait video titles like so many other content creators have. Grab your notepad and coffee because today we're diving into car financing in 2025, tips to avoid paying too much. If what we teach in this video seems too difficult for you to follow, visit our website, thehomeworkguy.com, and look up our hassle-free car buying service. We'd love to help you out. Just don't go this alone if you're unsure of yourself. Hiring one of our car coaches could be the smartest move you've ever made when it comes to handling a dealership. The amazing Elizabeth joins me to talk about dealership financing.
Hello everyone. Financing is where so many car buyers can get trapped into paying way more than they should. They were all focused on the price of the car and were largely unaware of what was coming next. Yet, it's in the dealer finance office where most people leave an extra $3,000 or $4,000 on the table. That's why today we're going to break this down into simple, actionable tips to save you thousands of dollars on your next car loan. So, number one is know your credit score and why it matters. Your credit score is the single most important factor in determining your interest rate. In 2025, buyers with excellent credit scores are seeing rates as low as 5.9%, while those with poor credit are stuck with rates of up to 15% or even higher. Here's how to check your credit score. You can use free credit monitoring tools like Credit Karma or annualcreditreport.com. If you're a credit union member, they will likely monitor your credit for you too. So there's just another reason to have a membership at a credit union. You can look for errors on your report and dispute anything inaccurate. If you're not sure how to dispute errors on your credit report on your own, consider hiring an expert like Lexington Law to do it for you. Here's how you can improve your credit score. Pay down your existing debts and keep your credit card balances below 50% of your available credit lines, and even better yet, below 30%. Never open new lines of credit before applying for a car loan or any other kind of loan. Those hard inquiries hurt your credit every time. If you know you have a potential problem, start building credit now with a cash-secured loan. They're very easy to do with credit unions, and literally anyone can do it.
Here's the bottom line. The higher your credit score, the lower your interest rate, and the more money you save over the life of your car loan. Don't walk into a dealership without knowing where you stand. Number two, get pre-approved for a car loan, and here's why this matters. Dealership financing can be convenient, but it's often marked up to benefit the dealer. And they can often tend to shotgun your credit application to several different banks, dinging your credit multiple times. What's interesting to know is that they don't do this to benefit you, they do this to benefit themselves. They are hunting for a bank that allows them to pack your loan full of add-ons and fees. Getting pre-approved gives you the upper hand. Where can you get pre-approved? Credit unions like Navy Federal or PenFed, banks like Chase or Wells Fargo, online lenders like Lightstream or Capital One Auto Navigator. How this helps? Pre-approval locks in a competitive rate. It allows you to negotiate like a cash buyer. You'll know your budget before stepping into a dealership, and that's a good thing.
Think of pre-approval as your shield against dealer fees and markups. It puts you in control of the financing conversation. Number three, understand the buy rate versus dealer rate. What's the difference? The buy rate is the interest rate offered to the dealer by the lender. The dealer rate is what they offer you after marking it up for profit. For example, if the buy rate is 4.5%, the dealer might offer you 7%, pocketing the 2.5% difference. Here's how you can avoid overpaying. If you're using dealer financing, ask the finance officer for the buy rate directly. Use your pre-approval as leverage to negotiate an even lower rate, and then just be prepared to walk away if they don't budge.
Dealers love to pad their profits with inflated interest rates. Knowing the buy rate can save you hundreds, even thousands over the life of the loan. And number 4, be aware of extended loan terms. What to watch for. In 2025, many dealers are pushing 72 or 84-month loans to lower monthly payments. While tempting, these extended terms can mean you pay far more interest. You're at greater risk of being upside down on your loan. Here's an example. A $30,000 car finance for 60 months at 6% interest rate costs $34,799. The same car financed for 84 months costs $37,951, an extra $3,152. Our advice, look at what the payments could be for 48 months. If you can't afford the payments at 48 months, you can't afford the car you're trying to buy. Once you've done that, request loan terms that are 62 or 66 months. A loan of this length puts you beyond the 61-month level, and that's key to avoiding prepayment penalties. Now you are free to pay off the car as quickly as you'd like.
Remember, extended loan terms for the sake of a lower payment are always a win for the dealer and the bank, and never for you. Stay disciplined and keep your focus on the total cost, not just monthly payment. Number 5, say no to add-ons in the finance office. What are add-ons, you say? Well, the finance office is where dealers try to sell you extras, like extended warranties, gap insurance, paint protection, fabric protection, tire and wheel coverage, and other things. Here's why they're expensive. These products are often marked up by 100% to 1,000% or more. Here's a simple way to handle it. Just decline these add-ons at the dealership. If you really want them, shop for alternatives. If you need gap insurance because you aren't putting enough cash down, talk to an outside insurance company or even your own credit union about it. If you really think you want an extended warranty, take the time to compare prices for extended warranties online or directly from the manufacturer.
Add-ons are the dealer's way of squeezing more profit out of you. Be polite but firm in saying no. Number 6, always avoid no money down deals. Now, always avoid these. Why dealers push them? Well, zero down offers sound great, but they lead to higher monthly payments and more interest over time. Plus, with zero cash down, you are guaranteed to need a very expensive gap policy. No cash down always hurts you. For example, on a $30,000 loan at 6% for 60 months, with zero down, payments are $599 a month, while the total cost comes out to $35,949. With $5,000 down, payments are $483 a month, and the total cost is $32,150. A $3,799 difference, and you got smacked with a $1,000 to $1,500 gap policy to boot. Our advice, aim to put at least 20% down. If that's impossible, buy a cheaper car. A good down payment reduces your loan amount, monthly payment, and total interest paid. It saves you money every single time.
A little upfront investment goes a long way in saving you money over the life of your loan. Number 7, watch out for hidden fees in your loan. Common fees to watch out for include dealer prep fees, administrative fees, and dealer document fees. How to avoid them is to read the loan agreement very carefully. Ask the lender or dealer to explain each fee. Negotiate to have unnecessary fees removed.
Be aware that the FTC says very clearly in the great big fines they have levied against offending dealers charging junk fees that the sale price of the car must be the full cash price that anyone can buy the car for, excluding only tax, title, and license fees. Number 8, don't finance sales tax or fees. Here's why this matters. Financing taxes, title, and registration fees means you're paying interest on those amounts, and that, my friend, is just stupid. Our advice, always pay for taxes and fees out of pocket if possible. This is in addition to your down payment plans. Include these costs in your savings plan before buying a car.
Paying upfront for taxes and fees might sting a little bit in the moment, but it'll save you a bundle of money in the long run. Number 9, compare rates from multiple lenders. Here's why it matters. Shopping around ensures you're getting the best rate available. Places to compare includes credit unions, banks, online lenders. If you're a veteran, shop USAA, Navy Fed, or PenFed. And a pro tip, apply to multiple lenders within the same 14-day period to minimize the impact on your credit score.
Remember, the first offer is rarely the best. Take your time to shop around. Number 10, understand the total cost of ownership. What it includes, monthly loan payments, insurance premiums, maintenance and repair costs for the vehicle, and fuel expenses. How to use this info? Choose a car that fits your budget, not just for the purchase, but also for your long-term budget.
A car might seem affordable at first glance, but don't forget to factor in the ongoing costs of ownership. If what we teach seems too difficult for you to follow, friends, visit our website, thehomeworkguy.com, and look up our hassle-free car buying service. Don't go this alone if you are not sure of yourself. Hiring one of our coaches could be the smartest move you ever made when it comes to handling a dealership. Here are some closing thoughts. Buying a car in 2025 is no small decision, and financing is where the dealership has the most opportunity to pad their profits. By understanding your credit score, getting pre-approved, and staying vigilant in your finance office visit, you can save thousands of dollars over the life of your loan.
If you found this video to be helpful, give us a great big thumbs up, share it with friends, and leave a comment down below in the comment section. Let us know about your financing experiences if you took dealer financing on your last car deal. We appreciate it because your stories in our comment section help the entire Homework Guy community.
The Homework Guy team is always here to represent you, the car buyer. If you have any trouble finding our hassle-free car buying service, or you'd like a smaller help package with me, you can text me at 701-441-3399, and I'll steer you in the right direction.
To all of our longtime subscribers out there, you guys rock. I'm Kevin Hunter, the Homework Guy, signing off on behalf of the amazing Elizabeth and all the great coaches and editors who make up our hassle-free Homework Guide team. Thanks for listening.